Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, we're very pleased you joined us for the second day of our Battery and Precious Metals Conference. Our first presentation of the day is from Neometals. Please note you can submit questions for the presenter in the box to the left of the slides. Also, you can reach out directly to the company if you would like to schedule one-on-one meetings after their presentation. At this point, I'm very pleased to welcome Chris Reed. He's the Managing Director and Chief Executive Officer of Neometals, which trades on the OTCQX Best Market under the symbol NMTAY and on the ASX under the symbol NMT. Welcome, Chris.
Thank you very much, John. It's a pleasure to be here, and good morning, ladies and gentlemen. It gives me great pleasure to tell you about Neometals and how we are enabling sustainable critical material production. As John alluded to, we are listed on the Australian Stock Exchange, the AIM market in London, and on the OTC market. So here's the disclaimer. Generally, you should seek legal advice before any investment decisions. So it gives me great pleasure to tell you a bit about Neometals. You know, for a lot of you, it'll be, who are Neometals? So, I founded the company with my father 23 years ago, and we listed originally, we come from a long line of hard rock miners. So we developed an underground gold mine just north of Kalgoorlie, which is Australia's mining capital. Then we moved from a small underground operation into a large open pit gold operation at Meekatharra. Meekatharra still runs today with a different owner. And then sort of mid last decade, we developed with a couple of big partners Mount Marion into, at the time, the second largest source of hard rock lithium production. And then we consciously made a pivot to the other end of the supply chain and looked at, the lithium's going into the batteries. We want to get exposure to that EV and energy storage megatrend. How best to do that? And, we looked down the other end of the supply chain and there was no one recycling these batteries. And we knew how hard it was to develop the lithium mines. And we could not for the life of us think why no one had turned their minds to recycling as a thematic. And so that's how we've sort of transitioned from multiple generations of hard rock miners into now urban miners. So what does Neometals do? So we commercialise a portfolio of sustainable processes to produce these critical materials from above ground or urban sources. These are extremely high value waste streams. So, some of the core elements around our technologies, one, we enable circular supply chains for the owners of the technologies and the plants. We enable future social license and regulatory compliance. It's something that we all have to deal with. We deliver our customers a sustainable operating and or capital cost and ESG advantage. And then obviously we have a continuing focus on improving those technologies. And so our main operational focus as a company is our flagship project, which is building a 2,500 tonne integrated recycling plant for Mercedes-Benz. So, to the best of our knowledge, we are the only plant supplier in the Western world that has contracted a marquee OEM and is building them a plant. So that's a very important de-risking of our technology. It will enable us to achieve product readiness for our commercial plants, which will process around 50 tonnes a day are about 21,000 tonnes per annum of lithium-ion battery plants. We also have technologies that can produce lithium chemicals from brines and to recover vanadium from steel scrap. We're currently looking to procure industrial partners to push those technologies into the next stage of commercialization, which we call the industrial validation stage. And we've also secured an option looking at a precious metal recovery technology from waste. So, you know, why recycling? Why lithium-ion battery recycling? So, you know, we love the thematic in terms of the long-term demand outlook. You know, the World Bank has forecast that, you know, lithium, cobalt, graphite, and nickel will be the most positively impacted commodities that we can extract from recycling lithium-ion batteries. The fifth most popular or forecast increase in demand is vanadium. So, you know, our suite of technologies gives us access to 5 of the top 6 demand forecast commodities going forward. And also what we liked about recycling is that you can give yourself exposure to those commodities without the mining costs. And what we see globally across precious metals and indeed, you know, battery commodities is that globally the grades are going down, the strip ratios are going up, the operating costs are going up, and therefore, you know, the margins long term are going down. So, you know, recycling enables you to produce the product and really just be exposed to the processing cost as opposed to the mining cost. So how we advance our technologies is that, you know, we start off, we identify a need, we innovate a solution, and then we run it through a disciplined development and evaluation process. And then what we do is we advance them through to a technology readiness level where we can procure industrial partners to fund the commercialization, because, you know, that's where the inflection point where the costs go up, but also the certainty on the benefits and the value of your underlying technology. So the battery recycling, we there have a TRL8, the vanadium and lithium at TRL6, waiting for industrial partners to take them through to the next stage. And we're currently looking at a TRL5 technology that can recover precious metals out of waste. So also how we do it, particularly when we're developing those technologies, you know, sustainability is one of our core values. So, you know, we are very, very conscious when we design the flow sheets so that they are very environmentally friendly. You know, we have we have a triple B ESG rating from MSCI. We won the best new technology on the AIM. We have made the finals of the German National Sustainability Award, and we've received the Green Economy mark from the London Stock Exchange. So when we're going to do it, you know, I'm pleased to say our 2024 tactical goals are set out here. So, you know, our prime focus is the construction and commissioning of our flagship pilot plant for Mercedes-Benz in Germany, currently in progress, to secure industrial partners to advance our lithium and vanadium technologies, to look at developing a precious metals recovery process. Currently, rather than looking at that, developing that ourselves from a TRL1 position, we are conducting due diligence on a TRL5 position technology. And we're looking to divest some of our upstream legacy mineral assets that aren't related to battery materials or precious metals. So today I'll focus mainly on Primobius, which is our incorporated joint venture with a very, very large German plant builder. And, you know, I'll tell you how we're building world-class lithium battery recycling plants. This comment came from the head of CATL, and he said that by 2042, China will no longer need to mine new battery materials because of the maturity of its battery recycling market. And that comes as a bit of a shock to see that. But the Chinese are the leaders, obviously, in the production of battery materials and battery cells, and they are the leaders in the recycling of lithium-ion battery cells. Most of the plants are in China, and that's really to get to be self-sufficient. And certainly that's what we're trying to emulate, but in the West, particularly in Europe and North America. So, our total addressable market is the fastest growing high value waste stream on Earth. So, we are in uncertain times. So in terms of looking at, what are some of the certainties? That there are more and more batteries produced every day. In producing those batteries, there are large volumes of scrap. And what we're even more certain about is that these batteries wear out, and the more you use them, the more they wear out. So just as we've got great confidence because we can see the number of battery plants globally and the ones being built out, we know what they consume, we know their scrap rates. The Tesla Gigafactory in Nevada, it took Panasonic 5 years to get the scrap rate below 20%. So there's significant volumes of production scrap and increasing waves of end of life, although they come back at the end of their useful life. So, very, very fast growing. The CAGR about 25% per annum. In terms of the high value waste stream, if we had a ton of these batteries sitting here today that have a nickel, cobalt, manganese cathode in them, it's the same as having a ton of ore that's 15% nickel, 15% copper, 2% lithium, and 2% cobalt. That just doesn't exist in nature. So there's a very, very large total addressable market. And so, we'd come up and developed a nice flow sheet, a nice technology. We'd taken it through the stages, but ultimately for success, in our mind, who was going to build the plants? And hence we entered into a very synergistic joint venture with a very large German plant builder with a global footprint. They've got more than 14,000 people in over 95 sites globally, production facilities in the Americas, Europe, India, and China. So they could build whatever the market needs, whenever it needs, wherever it needs. So we separated the underlying flow sheet and the technology and put that into an IP holding company that gets royalties from Primobius as it supplies plants to customers. And Primobius is the plant building arm. So we make money two ways. One, from a margin on the plant supply contracts, because in our mind, the only Western competitor we've got building plants is NMTAY. And then the technology licensing royalties will flow off product sales from the customers. So in that joint venture called Primobius, the plant building arm, we have three legs to it. So we run a small commercial lithium battery disposal operation for the German car makers. That's located in Hilchenbach, Germany, in West Germany. That's enabled us to procure a long-term partnership with Mercedes-Benz, where we've entered into a long-term R&D collaboration, and we are supplying them a pilot plant on a lump sum basis. That's also enabled us to license the technology to other third parties, including Stelco in North America, Redivium in the UK, Italy, Scandinavia, and the Balkans. So just sort of showing, on the right here, how Primobius makes its margin. Typically, we make our margin as the milestones are hit through the construction, commissioning, and steady state. So Primobius makes its money up front. It's a very capital light, low risk model. We don't expose ourselves to CapEx. The customers pay for the plant. We make margin on that process. We then transition to receiving a royalty based on the gross sales value of the products that are produced, and that goes into a separate IP holding company. In terms of the margins, if we model based on the long-term prices, just with nickel, cobalt, and manganese, it's a bit over $700 per ton of throughput. If you sell a 21,000 ton plant, that's a significant amount of money, about 14 million US per annum, using those forecast prices. The customer makes money, we make money, and we close the loop, and they get their battery materials back. So it's a model that we like and that our customers like. So how do we do it? How do we sell the plants? That's point number one. So we've got to deliver our customers a long-term sustainable competitive advantage. So we developed a process that has three parts. We have a section where we discharge and dismantle the battery modules. We then put them into what we refer to as the spoke, where we basically shred those batteries up. We physically separate aluminium and copper sheet, plastics, any casings, and then we're left with all those anode and cathode materials, what we refer to as black mass. We then put that into sulfuric acid, and we use standard processing techniques, although we do have some special patented tweaks in there, and we recover back the battery materials. So, that in a nutshell is what we do physically in terms of, the attributes and how we sell it to the market. One, we satisfy our customers' license to operate. Certainly in Europe, recycling is compulsory, and I'll go into that more in the next slide. Two, we must deliver them low-cost materials back. I mean, if it's cheaper selling the batteries and buying new stuff, we don't have a business, but I can assure you that we have a sustainable competitive advantage in terms of cost for our customers, and a fantastic reduction in the carbon footprint, which, it's not widely known, but the cars have a much larger carbon footprint than the internal combustion engine. And that's because of the battery and the imported materials, and so we can reduce that. So in terms of the license to operate in the European Union, you have to get to 90 and 95% efficiency rates. We can get there with our customers. All roads lead to having minimum levels of recycled content going forward, minimum domestic levels of production, and we're all conscious that China produces 80% of the battery materials. So the sooner we have, sustainable circular domestic supply chains, the better. In terms of the low-cost battery materials, the line along the bottom is what we can produce the lithium for after the nickel and cobalt credits, and the top line is the forecast lithium price. Lithium is the only non-substitutable element in the battery, and it actually carries the electrons. So lithium is the main focus for these car makers. In terms of the carbon footprint, we can strip out more than 85% of the carbon attached to the battery pack versus, traditionally mined feedstocks. So getting on to, the most important parts, where are we? Mercedes-Benz, we are supplying them with a plant. So that's an actual photo of the plant. I was there last month. That's one of the photos that we can show you inside the plant. That's what it looks like in terms of, if I take the shed off, that's what's inside. It's a fantastic large plant, substantially de-risks our technology, and like I said, it means that we can get to product readiness for the next stage. A long-term R&D collaboration, and the agreement with Mercedes says that if we build bigger plants, and Mercedes is going to need a lot to electrify their fleet. They're sort of targeted at somewhere around 900,000 tons of cells at the end of the next decade. End of this decade, start of the next decade. So that's going to produce a lot of scrap, a lot of end of life, and require a large number of plants. And so we've got a growing commercial pipeline. Our first commercial licensee of the technology was Stelco in North America, a leading steel producer, with very, very strong links, obviously, into the US automotive industry, really looking at having an end-to-end recycling for the whole of car. We've signed MOUs with Itochu to put a plant in Japan, with Neomobility to put one into Thailand. Neomobility is half owned by PTT, which is the biggest company in Thailand. And then we have some licenses to a company, an Australian listed company called Redivium, looking to put plants into Europe. And so, just to give you a bit of a flavour of, what our plan is to take on the Western world is, we've got our own operation, Primobius, at Hilkenbach. We're now scaling that up by, a factor of 10 for Mercedes-Benz. We'll then scale that up by a factor of just a little bit under 10 for Stelco. And we've got ambitions to grow that again by a factor of 10. So we're not rushing to go and build massive plants. We want to grow with the market and really, the strategy, the low risk strategy in building plants and low risk technology licensing royalties is the main thing I want you to take away. In terms of the other assets, a lithium chemical technology, we own 70% of that with one of the world's largest lithium producers, Mineral Resources, retaining 30%. Essentially, what we can do is produce lithium hydroxide directly from brine deposits. We purify and then electrolyze the brines. We replace expensive reagents. We've done a number of engineering studies. We look to, the indications are that it can convert lithium chloride to hydroxide at sort of less than half the traditional cost, and a substantial reduction in the carbon footprint. So that augurs well. That we're just finishing the pilot trials for that technology and in the process of securing partners to take it through to the next stage of commercialization. The vanadium recovery project is a project that we've been working on for a couple of years. We had a domestic source of very, very high grade vanadium bearing steel slags up in Sweden. We did a number of studies, put out a engineering cost study last year. We can produce down the bottom end of the cost curve. Unfortunately for us, in the 6 months after we put the study, the vanadium price halved. So we've had to park that project, notwithstanding that, it can produce the world's largest volume of high purity vanadium with a negative carbon footprint. But, the markets are what the markets are. You can't develop markets if the commodities don't allow you. We make great progress, in terms of we had all the approvals. We got approval from the European Investment Bank for debt funding. Couldn't procure the equity and currently looking at procuring external funding to advance that project, but that's really on a drip. In terms of precious metals recovery, precious metals uncorrelated with lithium. So what we've done is secured an option over a technology. We know the inventors, we know the vendors well. They've got a plant in the US. So we've been doing test work on that as part of our due diligence. We will give updates in August, which is not too far away, on the results there and how that's looking. That's the opportunity. It's the first time we've had a look at an M&A opportunity in a technology. All I can say is, we're doing a very detailed due diligence and we'll update the market. In terms of the strategic, reason that we're having a look at it, unfortunately, we've got, and having been in lithium since 2009, we've got a very high correlation with the lithium price, which that hasn't been great over the last 2 years. We all know that it's dropped sort of 85%. Our market capitalization has also dropped. So gold has gone the other way. It is recycling, recovering precious metals from recycling falls right within our bailiwick. The main asset that we're having a look to divest is the Barrambie titanium and vanadium deposit. It's a hard rock titanium vanadium, second highest grade deposit in the world after Rio's Lacteo. It's located about 500 kilometres from the coast. We've got a granted mining lease. We've had it for a number of years. We've spent a lot of money taking it to the development decision, but that too, the commodity prices have been affected, particularly in the last 18 months. But notwithstanding that, a very, very strategic and significant asset that we will be running a sale process on. So I think in summary, look, it's been a pretty tough sort of 2 years. We've continued to invest and advance and sort of stick to our knitting. There's not a lot you can do when the commodity prices tumble down like that. I mean, we do have, our technology licensing and or plant suppliers business models across our technology have served us well. The only thing, what you don't want to be doing is actually having operations at this point of the cycle, because they can pull you under. So yeah, look, we have a very loyal shareholder base. We're reasonably well capitalised at the moment, and we've got good broker coverage. We've got a strong team and culture, so we've got a fantastic board and experienced executives. And, a pretty good value proposition. We've got a clear strategy. It's environmentally friendly. We give our customers advantages. We're in that advanced industrial validation stage, smart business models, and we're diversified. So thank you very much. I will leave it there. Please contact us through the website to arrange a one-on-one meeting. So rather than, it's almost 10 o'clock at night, so rather than staying up, if you can, we're very, very happy to organise one-on-ones. So questions. Can you speak to the price difference between those who opt to recycle versus acquiring virgin material? Well, the pricing to buy them is the same. At the moment, there is no green premium. I think what the idea is that some people have to buy it. You have to pay market prices. If you recycle your own, at the moment we get paid in Germany to recycle, but if you own your own plant, you get to make the profit. You have to pay a royalty, but you make a significant margin. So that's the net advantage. The next one, can you speak to someone on the legacy assets and how divestment will impact the pipeline going forward? So look, divestment will obviously extend the cash horizon going forward. I don't think that any divestment will necessarily be triggering any significant advancements in the pipeline. By saying that, I think other projects in the portfolio. Is there a specific type of battery in the lithium space your firm is focused on? Yes, the process developed to date is capable of doing nickel cobalt manganese, nickel cobalt aluminium. The LFP, you could put LFP in there, but I don't think you'll make any money, and I don't think anyone else makes money, particularly at these lithium prices, because the only valuable part in an LFP is the lithium. Can you speak to your IP protection / portfolio? Yes, I can. So we have 4 or 5 granted national phase patents for the battery recycling. For the lithium chemicals, we have 19 granted, 14 pending. Off the top of my head, for the vanadium recovery, we have provisional patents lodged. I'm not sure how many national phase patents, but I'm happy to take that one offline if you wanted to drop us an email. Next one, in what way and how much capital do you need for expansion, equity financing, strategic partner? Well, look, we would not be adverse to receiving a strategic partner. I mean, the business does have cash flow. We're not in a cash flow positive situation at the moment. We continue to invest in those projects. We are pretty careful with what we are doing. you discuss non-dilutive, can you discuss non-dilutive funding opportunities from both public and private institutions? Non-dilutive funding opportunities. So if they're not equity, I presume they're debt or asset sales. We entertain approaches from public and private institutions and interested parties just as a matter of course. I agree. Ideally, non-dilutive funding would be great. Are you eligible for government incentives considering you are adding to the critical metals supply? So developing the flow sheets and taking them through to the technology readiness levels, we have availed ourselves in Australia of the Australian government R&D, where we get cash back, about 47.5 cents from every dollar that we spend on R&D. The business model for the recycling is actually plant supply and technology licensing. So, and that's a German incorporated joint venture. And we're in the business of supplying plants, which is not like recycling as principle. So not eligible in that. In terms of for some of the other ones, yes. And some of the, for the vanadium project, Business Finland approved a $15 million capital subsidy. They've recently offered us a 20% investment tax credit. So if it's there and we can get it, certainly we follow that up. So I have gone over time. But thank you very much, ladies and gentlemen, for allowing me to present and giving me your time. And I would encourage you to hit us up at the website if you would like a subsequent one-on-one, or you've got any additional questions. So with that, have a fantastic day.